Have you ever found yourself stuck, in life or at work, where you're facing a tough investment decision? You've analyzed all the data, and still, you get it wrong? You see someone else cash in on a trend, so you jump in too, only to crash and burn. You've read 100 self-help books, but when it really matters, you still can't make up your mind. If that sounds familiar, then Charlie Munger's wisdom might be exactly the key you need to break through. Poor Charlie's Almanack, a book that captures the essence of Munger's lifelong thinking, is far more than just an investment guide. It's more like a universal operating system for smart thinking. Over more than 50 years, Munger proved that ordinary people don't need genius or luck, just a solid mental framework to keep making wise decisions in business, investing, and life. The power of his wisdom lies in its counterintuitive clarity. While others chase hot opportunities, he insists on staying within your circle of competence and using multiple mental models to see through surface noise. While most people obsess over how to succeed, he flips the script. All I want to know is where I'm going to die, so I never go there. And while the world celebrates narrow specialization, he champions cross-disciplinary thinking, warning that to a man with a hammer, everything looks like a nail, a dangerous trap of the mind. In today's world, overloaded with information and changing faster than ever, Munger's wisdom doesn't just help us avoid dumb mistakes, it helps us cut through the chaos and find timeless principles. As he puts it, most success in life and business comes from knowing what not to do. Munger's thinking is like a universal operating system, and to understand its source code, we need to start with his life story. This man, whom Buffett calls his perfect partner, wasn't born an investing genius. His path was full of unconventional choices that later became living proof of his philosophy, multidisciplinary thinking and inversion. Let's start with his unusual career as a lawyer. Charlie Munger's story begins in Omaha, Nebraska, the same small town that gave us Buffett. As a teenager, he worked at Buffett's grandfather's grocery store, 12-hour shifts, hauling goods, and following strict rules like paying 2 cents for Social Security at the end of each shift, which he called socialist nonsense. That early grind taught him discipline and a deep respect for reality. It also gave him a lifelong sensitivity to cash flow and cost control in investing. In college, his interdisciplinary talent was already showing. He studied math and physics, then meteorology during W2, and eventually graduated near the top of his class from Harvard Law. This cross-field journey planted the seeds for his later lattice work of mental models. When he entered law, he didn't stick to the traditional hourly billing model. Instead, by helping clients with business matters, he quietly built up real-world experience in operations and investing. He even invested in a client's electrical company and co-developed real estate projects, earning $1.4 million in just a few years. When he co-founded the law firm Munger, Tullis and Olson in L.A., his unique character really showed. He told his lawyers, "Just do great work, clients will come." No flashy marketing. And when a young partner was diagnosed with cancer, Munger gave him part of his own equity. Not because he had to, but because the guy needed help. This people-first, profit-second mindset stood in sharp contrast to Wall Street's greed, and it became the foundation of his investment philosophy. Honesty is the best long-term strategy. A dinner in 1959 became a turning point in Munger's life. The 29-year-old Buffett met the 35-year-old Munger. They talked business, history, finance, human nature, and realized they saw the world the same way. Buffett later said, "Charlie told a joke that night, and I laughed so hard I knew I'd met a kindred spirit." That friendship changed everything. Early Buffett, influenced by his mentor Ben Graham, focused on cigar butt stocks, cheap companies trading below net asset value. But Munger pushed him. Buying a wonderful business at a fair price is far better than a fair business at a wonderful price. That shift led Berkshire to invest in great companies like Coca-Cola and Gillette, marking a complete upgrade in their investment philosophy. Munger's impact went beyond strategy. His multidisciplinary thinking helped Buffett break free from narrow financial analysis. Take BYD. Munger studied its founder, Wang Chuanfu, a tech-obsessed visionary. and convinced Buffett to go all in on a Chinese company most Wall Street analysts ignored. Buffett admits, "Charlie broadened my horizons. He's the smartest person I know." Beyond investing in law, his curiosity touched every part of life. He's a voracious reader. As he says, "I've never met a wise person who didn't read constantly." From physics papers to Cicero's on old age, from Darwin's biography to economics, his mind spans over a dozen fields. His kids joke he's a book with two legs. He's also a self-taught architect. He designed his own home, Stanford dorms, even the Munger Hall Research Center at the Huntington Library, down to the construction details. That same obsession with systems and precision shows up in his investing. He doesn't just look at numbers. He dissects a company like an engineer examining a bridge. In philanthropy, he stays hands-on. He donated $60 million to Stanford, but insisted the buildings be durable and beautiful. When funding a research center, he reviewed the budget line by line. Every dollar had to count. Franklin used wealth for good, he says. I'm just following his lead. That reverence for role models is a perfect example of his lifelong learning mindset. From lawyer to investor, from polymath to philanthropist, Munger's life is multidisciplinary thinking in action. Every choice he made echoes his later principles. Break out of silos, think backward to avoid failure, and let honesty and patience compound over time. And that's where we begin to understand his wisdom. As he quotes Franklin, "The things that make us happy are virtue, health, talent, and temperament." Munger proved it with his life. These matter far more than money. Munger's life was an interdisciplinary journey, from math and physics to law, real estate, and investing. He never let one field define him, and that taught him a crucial lesson. Real-world problems can't be solved by one discipline alone. Just as he designs buildings, balancing engineering, aesthetics, and function, solving life's and investing's toughest problems requires a diverse mental toolkit. Munger repeatedly warns of a mental trap. To a man with a hammer, everything looks like a nail. This man with a hammer tendency means once you master one field, you start using it for everything, warping your judgment. An economist slaps a model on human behavior but ignores psychology. A biologist ignores climate when studying evolution. A CEO reads financials but misses industry shifts, like Nokia missing smartphones. An investor uses PE ratios but ignores brand strength or management flaws, and ends up wrecked by market swings. Munger saw this firsthand. As a young lawyer, he noticed many peers stuck in legal jargon, unable to see the bigger business picture. By learning accounting and tax, he offered better solutions, an early example of multidisciplinary thinking in action. Munger says, "You don't need to master every field. Just grab the big ideas from the key ones and weave them into a latticework of mental models." His core models include math, compounding, the eighth wonder of the world, explaining long-term investing; probability, the foundation of decision trees and risk assessment; physics, critical mass. When a company hits scale, its advantages snowball; redundancy, like Berkshire's cash reserves, ready for black swan events; biology, natural selection, Amazon versus traditional retail; ecosystems, Apple and its supply chain working in sync; psychology, his famous 25 biases, like loss aversion, selling good stocks too early; or confirmation bias, ignoring bad news. This, he says, is the most practical and most ignored field. Economics, scale advantages, like Costco's bulk pricing; marginal utility, knowing when to stop expanding. The power isn't in any one model, it's in combining them. Take Coca-Cola. Psychology explains brand loyalty, economics explains low prices, and culture shows it as a symbol of America. Only by layering these can you see the true value. Munger's genius isn't just about making the right move. It's about avoiding the wrong ones. And multidisciplinary thinking is the key. When others panic over stock prices, he uses history. This too shall pass. He uses psychology to spot herd behavior and ends up buying when others are selling. He borrows redundancy from engineering, keeping cash on hand to survive crises. He sees personal growth like evolution. Only the adaptable survive. This hunger for cross-disciplinary knowledge keeps his mental models evolving, forming a true operating system for a complex world. Munger's multidisciplinary thinking is all about seeing through the surface, using insights from different fields to get to the truth. And nowhere is this clearer than in his investment philosophy. His and Buffett's strategy didn't start with great companies. It evolved. From Graham's cigar butt approach, buying cheap stocks just because they're cheap, to buying wonderful businesses at fair prices. And that shift? It wasn't just about better math or smarter analysis. It was multidisciplinary thinking breaking free from a narrow, outdated framework. So why does Munger say cheap doesn't mean good? Benjamin Graham, the father of value investing, taught investors to look for stocks trading far below their net asset value, like picking up a discarded cigar butt on the street. Even if it's soggy and half-burned, you might get one last free puff. The young Buffett loved this idea, and Munger at first agreed. It made sense. Buy low, have a margin of safety, limit your downside. But as they gained experience, Munger saw a fatal flaw: the time cost of holding these stocks. Cigar butt companies are usually broken. Weak fundamentals, declining businesses. You spend tons of energy figuring out their liquidation value, only to realize they're slowly bleeding money. Over time, that drags down your returns. Second, and even more important, you end up missing the great companies. If you only care about price, you ignore quality. And that means you skip businesses with real moats, real durability. As Munger once joked, if we only bought cheap stocks, we'd never have bought Coca-Cola. It's never been the cheapest. But its brand keeps printing money, year after year. And here's where multidisciplinary thinking sounds the alarm. From psychology, chasing cheap stocks plays into loss aversion. You're so focused on not overpaying that you ignore how bad the business actually is. You think you're being cautious, but you're actually taking on more risk. From biology, it's like betting on a dying species instead of one that's adaptable and thriving. You're going against evolution, against survival of the fittest. That's why Munger pushed Buffett to move beyond cigar butts, not with a better spreadsheet, but with better thinking. He redefined what value really means. To Munger, a great company must meet 3 criteria, each shaped by multiple disciplines. First, a moat, a durable competitive advantage. He uses economics to analyze pricing power and sociology to understand brand loyalty and cultural staying power. To Munger, a moat is a business's competitive edge, built through brand, technology, scale, like an ecological niche in nature, hard for others to invade. Take C's Candies, high quality, fierce brand loyalty. They can raise prices year after year, and customers still buy. That's pricing power. Buffett once recalled, "We almost walked away from buying C's because of a $10,000 price gap. Thank goodness we listened to the advice. Great assets are worth paying up for." Second, management, evaluated through psychology and ethics. He says, when you buy a stock, you're buying a piece of a business. So the CEO's competence, integrity, and alignment with shareholders matter more than any spreadsheet. From psychology, honest leaders reduce agency costs. They don't overexpand for ego or hoard cash. They make rational, shareholder-friendly decisions. From ethics, managers who put shareholders first are more likely to resist short-term temptations, like faking earnings or chasing fads. Third, long-term thinking, validated through math and history. Munger believes in holding great businesses for decades because he trusts compound interest. Like the mathematical formula of interest on interest, great companies grow earnings exponentially over time. Take Coca-Cola. Over the long run, its brand strength and global distribution network create value far beyond short-term stock price swings. And history teaches him, companies that survive depressions, wars, and tech revolutions, they're the most resilient. Durability is a signal. Munger's investing logic is always rooted in multidisciplinary thinking. The 3 principles he distilled remain powerfully relevant today. The first principle, stay in your circle of competence. Use your knowledge limits to filter out bad bets. He constantly reminds us, only invest in what you truly understand. This comes from his deep awareness of the man with a hammer tendency. If you don't grasp how a tech company actually works, don't buy it, even if everyone else is piling in during a market frenzy. As he said, if you've got a real talent, you'll know exactly where your edge lies and where it ends. And if you have to ask, is this outside my circle? The answer is probably yes. The second principle, wait for the fat pitch. Use probabilistic thinking to control impulsive decisions. Inspired by Ted Williams's 77 grid hitting zone in baseball, Munger believes investing is about waiting for the perfect swing. You don't swing at every pitch. You wait until the ball is right in your sweet spot, when a company's value is far above its price and the odds are overwhelmingly in your favor. As he put it, the key to our success: we make very few decisions, but when we do, we bet big. The third principle, avoid false safety. Use inversion to uncover hidden risks. He starts by assuming the investment will fail, then works backward to find every possible way it could go wrong. He uses accounting to spot fraud, psychology to read management's incentives, and physics concept of critical mass to anticipate industry tipping points. For example, he avoided the dot-com bubble early on, using psychology to see the herd mentality, and economics to realize most of these companies had no real profits. From cigar butts to great businesses, the evolution of Munger's thinking is really about multidisciplinary wisdom, surpassing a narrow valuation framework. He never denies the value of a margin of safety, but he goes further. He uses multiple disciplines to assess a company's long-term vitality. That's his greatest contribution to value investing. Investing isn't just number crunching. It's a deep, multidimensional understanding of business essence, human nature, and societal trends. Munger's investing logic is rooted in multidisciplinary thinking, and that same mindset shaped his entire life philosophy. He didn't chase flashy ideas. Instead, he used simple, timeless principles to navigate life's complexity. These rules may sound basic, but because they're built on multidisciplinary wisdom, they cut deep. As he wrote, so much of life's success comes from knowing what to avoid. Munger's multidisciplinary mind wasn't born. It was built through relentless curiosity and a hunger for understanding. He admitted he never took formal classes in chemistry, economics, or psychology. But through decades of self-study, he absorbed their core ideas and turned them into mental tools. His reading list? Biographies, learning how minds like Benjamin Franklin and Charles Darwin thought. Scientific works, using physics, critical mass, to understand how systems tip and change. Psychology, digging into the root causes of human misjudgment. He believed in befriending the dead, learning from the great minds of the past, so you don't have to reinvent the wheel. He rejected learning for the sake of knowledge. He insisted, knowledge must be used to solve real problems. For example, when he read Cicero's On Old Age, it wasn't just to appreciate Roman philosophy. It was to learn how to age with grace and dignity. This practical mindset ensured his knowledge wasn't theoretical. It was applied every single day. Get a little smarter every day. That was his motto. He saw self-improvement through the lens of biology. Continuous learning is how you adapt. Just like natural selection, only those who evolve survive. Munger's life strategy was deeply shaped by inversion, a concept from math and physics that he applied to every area of life. He said, don't obsess over how to succeed. First, figure out how you'd fail, then avoid those paths at all costs. He listed ways to avoid misery. Never use chemicals to alter your mood. Stay clear of addiction. Don't envy others. It only poisons you and gains you nothing. Don't harbor resentment. Life is hard enough. Don't make it worse with bitterness. Don't be erratic. Be consistent. Focus on what you're doing. That's how you build compounding momentum. Munger believed in learning from failure. He collected disasters across industries and turned them into a what not to do checklist. For example, he studied why companies go bankrupt and found the top 3 causes: arrogance, laziness, greed, so he made sure to avoid them in his own decisions. This learn from history mindset? It's really about using historical perspective to avoid repeating the same mistakes. He also believed, honesty is the best policy. To him, integrity and long-term success go hand in hand. This belief came both from his admiration for figures like Franklin and from his deep understanding of human nature. From psychology, honest people earn trust faster, and that trust becomes invisible capital over time. Munger often chose to take a loss rather than gain an unfair advantage. Early in his real estate investing, he once voluntarily redeemed a partner's bond at full value, even though the partner hadn't asked. When doing business with friends, he'd give them a better deal if they needed it. He believed short-term sacrifices build long-term trust. He also stood firm on principles, no gray zones. He refused to do anything that was technically legal but morally wrong, like stock manipulation or accounting fraud. Some things are legal but not worth doing, he said. You need your own moral line. This integrity kept him clear-headed, even in the chaos of Wall Street. Also, Munger was kind and respectful. Though blunt, he was incredibly patient with people who were genuinely trying. He'd spend hours mentoring young entrepreneurs. He'd cover for an employee's mistake, as long as they admitted it and fixed it. Respect others, he said, and you respect yourself. A simple application of sociology's reciprocity principle. Munger's lifestyle was as simple as his thinking. He often said, "Don't let complexity drown out the core." He lived in the same modest house for decades, flew coach. He refused unnecessary material pursuits. This minimalism wasn't about being cheap, it was about cutting distractions, focusing on what truly mattered. Sure, he lived simply, but his mind was rich. Too many material needs become a burden, he said. Like extra weight in physics, it just slows you down. Rather than chasing money, he used that time to read, think, or be with family. Using economics' marginal utility, he focused his energy on the highest impact activities, like debating investments with Buffett or designing efficient charity operations. I've only made a dozen really important decisions in my whole life, he said. Munger's life philosophy was really just multidisciplinary thinking applied to daily living. He used biology to understand growth, psychology to avoid human pitfalls, history to learn from the past, ethics to anchor his moral line. These simple ideas didn't sound fancy, but like compound interest, they built massive power over time. As he quoted Franklin, "An empty sack cannot stand upright." A person's life gains depth from the combination of knowledge, character, and action. That's Munger's most precious gift to us. We've walked through Munger's multidisciplinary models, his investment logic, and his life philosophy. These aren't just theories, they're practical guides, proven by a lifetime of living. As Munger said, having ideas isn't enough. You have to live them. To turn his wisdom into your own ability takes deliberate reflection and consistent action, exactly what his core principles of lifelong learning and inversion are all about. Munger constantly warned against self-deception. Many people stop at understanding. They can recite mental models, but still use only one lens when deciding. They get inversion, then repeat the same mistakes. The root cause? They ignore Munger's constant warning, the man with a hammer tendency. We always default to what we know, even when it's wrong. Common mistakes include confusing reading with learning, thinking, I finished the book, so I get Munger now, without ever applying his models to a real problem, or avoiding uncomfortable thinking. Multidisciplinary thinking demands you connect ideas across fields, which takes extra effort. Many people give up because it's hard and retreat to the comfort of one-way thinking, or ignoring small mistakes. If you don't fix the little errors, Munger said, the big ones will come knocking. Most people can't see their own thinking errors, like selling a great stock too early due to loss aversion, then blaming bad luck. Munger loved checklists, borrowed from aviation safety. This tool works for internalizing wisdom too. Create 2 lists and review them regularly. A cognitive bias checklist. List Munger's 25 psychological misjudgments, like confirmation bias, anchoring. Track if you fall into them daily. For example, Did I buy something just because everyone else was? Did I ignore evidence that contradicted my view? A principled checklist. Check your actions against Munger's core rules. Are you staying in your circle of competence? Did you invest in something you don't understand? Are you waiting for the fat pitch? Or did you swing at a bad ball just because you were impatient? Are you getting a little smarter each day? What did you learn today from a new field? This checklist method is really about using external tools to fight human laziness. As Munger said, even the best pilots don't skip the pre-flight checklist. Munger's wisdom is like compound interest. It builds through consistent, small actions. Here are 3 exercises you can start today. Practice 1. Once a week, use multiple models on a daily issue. Pick something familiar. A restaurant, an app. Try to analyze its success or failure through at least 3 different disciplines. For example, with Starbucks, psychology, the third place for social connection; economics, buying coffee in bulk to cut costs; sociology, the brand becoming a symbol of urban life. This exercise helps you break out of one-way thinking and slowly builds the habit of connecting ideas across fields. Practice 2. Once a month, use inversion to review a failure. Think of a recent mistake, like a bad investment or poor decision. Ask, what killed this? How did it go wrong? For example, was I overconfident and ignored risks? What rules could have prevented this, like staying in my circle of competence or seeking disconfirming evidence? Munger said, learning from failure is more effective than learning from success. This review turns mistakes into experience. Practice 3. Build a blind spot reading list and stick with it long term. Munger's wisdom came from wide reading. You can copy his reading structure. Biographies, like Autobiography of Benjamin Franklin or Einstein's biography, to learn how great minds thought. Science and psychology, like Thinking, Fast and Slow, or On the Origin of Species, to build the foundation for multidisciplinary thinking. Business and investing, like The Intelligent Investor or Buffett's Letters, to connect theory with real-world application. Key: read with questions. When reading psychology, actively look for theories that explain your own decision-making errors. Munger never demanded perfection from day one. He admitted he made tons of mistakes in his life. Internalizing his wisdom requires accepting that progress is gradual. Go slow. Don't rush to master every mental model. Start with the core few: compound interest, inversion, psychological misjudgments. Treat correcting errors as normal. Like Munger, be willing to destroy your favorite ideas. Regularly review and update your thinking. This isn't self-doubt. It's evolution. Take a long-term view of change. Just like compound interest takes time, mental shifts require accumulation. Stick with deliberate practice for a year, and you'll find your perspective on problems has completely shifted. Munger's wisdom isn't a ready-made answer. It's a toolkit to help you find your own. He proved, you don't need genius-level talent, just multidisciplinary thinking, inversion, and lifelong practice. And you can navigate a complex world with clarity and calm. As he quoted, "My sword is only for those who can wield it." May we all pick up that sword. Avoid the traps, swing at the right pitches, and live with clarity, courage, and purpose. Finally, congratulations, you've finished another book.